Today, we're diving into an important aspect of retirement planning: life insurance for your spouse. Whether you're newlyweds, celebrating decades together, or anywhere in between, understanding how to properly insure your partner can be important when securing your financial future together. Why consider life insurance for your spouse? Here are a few compelling reasons. Income replacement. These are funds needed to replace your spouse's income, which could be vital in maintaining your standard of living, especially if you have children, debts, or other monthly expenses. Debt coverage. To cover debts such as credit cards, loans, or a mortgage that might otherwise strain the surviving spouse. Funeral expenses. To cover funeral and final expenses, relieving financial stress during a difficult time. What are your future obligations down the road? Think about future needs like your children's education costs or retirement savings, and how you may cover those expenses. When it comes to choosing the type of life insurance for your spouse, there are two main types to consider. Term life insurance provides coverage for a specific period, such as 10, 20, or 30 years. If you pass away during this time, your policy pays out a death benefit to your beneficiaries, as long as the policy is active and premiums are paid. It's generally more affordable and may be sufficient if you only need coverage until major debts are paid off or until children are financially independent. Permanent life insurance includes whole life and universal life policies that offer lifelong coverage as long as premiums are paid and may build up cash value over time. This type of insurance is generally more expensive. Determining how much life insurance to buy for your spouse involves several factors. Income replacement. Consider your spouse's annual income and the length of time you would need to replace this income. Future financial goals. Think about costs like your children's higher education, future investments, or retirement savings. Current financial resources. Take into account any other assets, savings, or life insurance policies already in place. A general rule of thumb is to have a policy that is 10 to 12 times the annual income, but this can vary based on your specific circumstances. Choosing the right policy for your spouse means comparing different options. Here are a few tips. Read the fine print. Understand the inclusions, exclusions, and terms of the policy. Consider riders. Look into additional benefits like critical illness riders or premium waivers that might be beneficial. And lastly, professional advice. Consult with an insurance professional who can provide clarity and help tailor a policy to your specific needs. Thank you for watching our guide on understanding life insurance for your spouse. Taking the time to ensure your spouse is properly insured is a vital step in helping protect your family's financial future.